Greetings, everyone, and welcome to today's chart drill down. This is Richard Krivo with our chart reading session for the 22nd of June. And as I've mentioned in previous YouTube videos, I plan on doing a chart drill down like this once a week. I may go into a daily basis, but that's yet to be decided, and there are certain parameters that might be involved there. But I do this on a once a week basis so that those of you who are interested can get a feel for how I like to analyze the charts each day to look for trading setups. And at the present time, trades on currency pairs that I've stalked on this drill down process that I personally do, I do it on a daily basis, they're up roughly 2,200 pips since the first trades triggered back on May 28th. Let me see if I can bring that up for you so you can just see it. I'm going to drag that into the, hopefully you can see that. Let's see, we're long the pound Aussie and short the New Zealand US dollar, short the New Zealand CAD, long the Euro New Zealand, long the Euro CAD, and long the Euro USD. And I took this maybe about 2 hours ago, so it'll just give you an idea of where things are. And some of the other trades that we were in, they've been stopped out for losses. Some have been stopped out profitably as we've trailed our stops. But the bottom line is that the open trades are net profitable. And obviously that is our ideal outcome. And this will not always be the case, as there's going to be losing trades. However, my objective is to let the winners run and cut the losers in a relatively short period of time. And so you're looking at that screenshot. Let me get rid of that for the time being. And again, as we go through these charts, if you have any questions about how and why my charts are set up the way they are, please reference the video entitled Chart Tutorial, which was posted on May 11th. And also feel free to email me at rkrivofx@gmail.com, as you see right down there. And we'll try to get through, as usual, we'll try to get through as many pairs as we can. We've never made it through all of them, but I got a few I want to share with you today, just so you can see what I'm looking for in terms of a setup. Let's take a quick look at our risk disclaimer slides here, or risk disclaimer slide. And trading foreign exchange involves significant level of risk, may not be suitable for all investors. You should only be trading with risk capital. High degree of leverage. Keep in mind that can work both ways for you. It's a wild ride when it's working in your favor, and it's a wild ride in a different way when it's working against you. And the content that I'm providing here is for informational and educational purposes only. This is not intended as any kind of specific trading recommendation. Okay. And again, in no way do I imply or guarantee that any setup that you see in this video will result in a winning trade. I've had some questions about what do you mean when you say setups, and that is just, a trading setup is just that. It's a setup, nothing more. It may or may not trigger. If it does trigger, it may or may not produce a winning trade. And these setups, all they do is put the probabilities of having a successful trade, a winning trade, more in our favor. The setup and its execution by no means assures a winning type of trade. My goal in all this is teaching you how to trade so you don't have to rely on anyone else as you continue in your trading journey. Hopefully by seeing these and maybe working with me on a one-on-one mentoring type of basis, it's going to shorten your learning curve a bit. That's what I'm all about here, and that's what we want to do. And if you are interested in mentoring, email me again at rkrivofx@gmail.com and put one-on-one in the subject line, and I will be more than happy to send you information on that. Okay, let's take a look at some charts here. Hang on a second. There we are. And a couple pairs that I had outlined to take a look at is the pound dollar. Now, I mentioned to you a few weeks back that I look at a strong, weak currency analysis, and that kind of points me in the direction of certain pairs that I'm interested in trading. And the pound is strong. It's the strongest among all the currencies right now. And the dollar is on the weaker side of the ledger sheet. So we're looking for opportunities to buy this particular pair. And as I'm looking at the weekly chart, weekly, daily, 4 hour, 1 hour, right here, as I'm looking at this, I see price has been making higher highs and higher lows on the weekly chart. And we've got the Let me enlarge that for you just a little bit here. We've got, see where slow stochastics here? It's got a little angle and separation to the upside here. It's very modest, but nevertheless it is there. So we've got some room to run on this particular pair. If price breaks above the previous high, we've got roughly, if we go up just to the bodies of the candles, going back, we've got about 160 pips of room to move. So I would be interested in setting a price alarm on this trade, but let's see what we can find entry-wise. And we can see, again, higher highs and higher lows on the 4-hour chart, higher highs and higher lows on the 1-hour chart. It's touched the lower Donchian channel right here. So I'd be interested in setting a price alarm at roughly 159.33 on this pound-dollar pair. And when I set a price alarm, all that does is let me know when price has reached that level. The alarm may never go off. The pair might not reach that level, and that's fine. But if it does reach that level, what I'm going to do is I'm going to bring up this particular currency pair on the charts, see what it looks like, see if the pound is at that time strong across the board, if the pound is moving up across the board, if the dollar is moving down across the board, or it's maintaining its weak posture, shall we say, then I'd be interested in this particular trade. But I would set the price alarm there. That's not a signal to entry. It's a signal to check out the charts, see what's going on. Another pair that I looked at that I wanted to share with you was the Euro-Yen currency pair. And there we go. We got it changed again too here. Okay, and it's a similar thing. On the strong weak analysis, the euro is strong. It's not the strongest currency, but it's in the strong category, stronger camp. The yen is in the weaker camp of currency pairs, hence why we're getting this move to the upside. And price has been ranging, as we can see on the 4-hour chart, trading a bit between 137.90 level and between about 141 level. We've got that range. Now we had a nice pullback to the lower Donchian channel on the 1-hour chart. So I'd be looking to set a price alarm to check it out on this pair, check the setup out if it triggers at that point at about 140.60, around in that area. And we can see slow stochastics again on the weekly chart is pointed to the upside with some angle and separation. We've got a little bit of negative divergence with slow stochastics on the daily chart, and we've got slow stochastics on the 1-hour chart poised potentially to roll over to the upside. Doesn't mean it's going to happen, but it's poised to do that, and nothing happens until it happens. So if price gets up to that 140.60 level roughly, that generally is going to make slow stochastics roll over to the upside, because what happens up here on the price chart is what dictates what happens down here on our indicators. Another pair that I noticed was the Australian Canadian dollar, Aussie CAD, on that one. And here, what I did notice, and I just want to point this out because I put an article out there on it this week, that on trading a triangle, and I'm seeing a rough triangle pattern here. Let me see. Let me get to adding a line. There we are. Okay, add line, freehand, and let's just go from that area and roughly this area in here, and let me make those lines a little bit thicker so you can see them better. Okay, so you can see the shape of the triangle here, and roughly all I'm doing here is, you see price action is compressing, 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 coiling up like we talked about in the article that I tweeted out. I think it was earlier this week on YouTube. I posted it. And we see price action is, again, oscillating and kind of coiling up. What we'd be looking for is a breakout in either direction to trade the pair. And let's take a look and see which way it's going on. The bias would be to the downside as we're looking at the weekly chart and at the daily chart, because price action is below the 200 period moving average on both of them. So ideally, the ideal breakout that I would like to look for is to the downside, because that'd be in the direction of the longer term trend. So let's say that happens. And right now, we're not going to do anything because price action is just coiling up on this 4-hour chart, right on either side of the 200 period moving average. So if price breaks below and one of these 4-hour candles closes, excuse me, 1-hour candles closes below support, that would be our signal to enter the trade short, and we could place our stop above the upper level, our resistance level, right in there. And again, what I would do personally, set a price alarm at that level. I always like to check things out in real time rather than necessarily relying on an entry order for that type of thing. Nothing substitutes real-time eyeballs on a chart. So I wanted to point that out to you because that kind of exemplified a little something that we were talking about during the week. Let's take a look at the pound Aussie currency pair. And here again, strong moves to the upside. On the weekly chart, we've got higher highs, higher lows. We've got slow stochastics above 80 and open to the upside with some decent angle and separation. On the daily chart, slow stochastics is above 80, indicating that's definitely a bullish sign. We had a bit of a pullback here, pretty strong. Didn't touch the lower channel at the time. Lower channel is now moving up, but I'd be looking at the potential for setting a price alarm on the pound Aussie at roughly 2.0550, somewhere along in those lines. You could also, look for a break of the upper channel at the same level on the 4-hour chart. And slow stochastics is bullish in each scenario. Again, this would be a higher probability price alarm setting, but again, in no way does the setup indicate that this is going to turn into a profitable trade, because all we're doing is looking for probabilities in trading. That's all we're doing. We're looking for higher probability trades. We take them. We use good money management. We use good trade management, knowing going in that some trades will be winners and some trades will be losers. And at the end of the week, the month, the quarter, we want to be in a profitable situation, knowing we're going to have winning and losing trades. By letting the winners run, cutting the losers short, we extend the possibility of, at the end of that time period, the week or the month or the quarter or whatever it might be, we stand the greater possibility of having a net plus situation in our trading account. Let's take a look at the pound Canadian. We know the pound is the strongest currency out there, so some of the trades obviously that we're looking at. I mean, as I look at this 1-hour chart, this just popped into my head. I get distracted by nice chart movements. I don't know if any of you ever heard the expression or heard me talk about it before, but a stair-stepping chart. I mean, this is it. This is classic. This is lovely to the upside. This is just the kind of thing we're looking for. Moves up, consolidates, moves up, consolidates, moves up, consolidates. And that's what we're seeing here on this pound Canadian. And on the last analysis that I did, again, pound was strong. Canadian dollar was weaker than the pound, but not among the weakest currencies that was out there. But when I look at the chart, what I'm seeing here again is good angle and separation to the upside. There's a little bit of negative divergence here. We've got angle and separation to the upside, not as strong, but angle and separation to the upside. On the daily chart, higher highs and higher lows, and we had a nice pullback, not to the lower channel on the 1-hour chart, but pretty darn close here at this point. So this one, I'd be looking at setting roughly a price alarm at about 1.9530, 1.9520, somewhere in there, just to check out and see how much room that has to run as we're approaching the end of our time here. Let's see, we scroll out a little bit and we see that, okay, if it takes out the previous high, which is roughly at 1.9555, we've got to the next level, we've got lots of pips, about 1,000 pips roughly, potentially, that the pair has room to run to the upside. So we're running out of time in our 15-minute YouTube here. So I just want to thank you for attending. Hopefully you find these helpful. Let me know if you do, or let me know what you'd like to see going forward. Richard Crevo here, and I look forward to seeing you and talking with you on another YouTube. Have a good evening.